Inflation surprise is, of course, boosting altcoin season, or is it? Today we'll break it all down. Try to get into this because there's a lot happening in the market. Let's go into it. I do want to thank our sponsor, and that is OKX, where you guys can jump into a lot of things, not only just trading, but you can also earn up to 4.1% APY holding USDG on OKX as well as RLUSD. So there's a lot available out there. One thing I like about this is it's no subscription. You know how certain exchanges charge you a little money to be able to get access to these good yields. Well, that's not the way on OKX. No lockups as well, meaning you can pull it out anytime, flip it right back into cash or into crypto, you choose. All of that available over on OKX. All you have to do is use our link and you guys can get out there and start trading, earning yield, all sorts of activities out there for where this market is heading right now. And right now, it's heading in the right direction. Let's go over to a couple of points I want to hit on, and that is the June CPI inflation falls to 3.5%. This was below expectations of 3.8. The core CPI fell to 2.6, below expectations of 2.8. And the last time that we've had these kind of numbers was all the way back in May of 2020. And we all know what happened in May of 2020. So pretty significant here. And the stock market as well as crypto is rewarding these numbers. I think some of the things we're going to see right now is really going to boil down to this right here. And that is, where is the Fed chair going to be when it comes to a rate cut, a rate hike, or a pause? So he went in front of Congress in his first monetary policy report. We've got a few clips for you that talks about his direction. And there's some very specific ones here, I think, that are intriguing, and you kind of have to read between the lines, but we'll talk about it a little bit. But this is in reference to his tolerance for inflation. Take a look.
Now at the Fed, our number one objective is getting monetary policy right. That's our clear and constant aim, the star we steer by. And if we get policy right, and I can assure you we will, the inflation surge of the last 5 years will be a thing of the past. Underlying inflation over longer time horizons is determined largely by monetary policy. As the chairman said at the outset, inflation's a choice. The members of our committee have no tolerance for persistently elevated inflation, and we share a resolute commitment to ensure price stability.
All right, so you can see he's very, I would use the word resolute. He is very committed to this idea of changing some policy within the Fed architecture to be able to get in and really control what's happening in the markets. Peter Schiff touched on this. The only way regime change at the Fed will reduce inflation is if we also get regime change in Congress. And that, I know, is not going to happen. But ending it requires huge cuts to government spending, which is another thing that's not going to happen. I think all of this really boils down to, how does the Fed start to put more pressure on the overall market? And one of the questions that have been asked of Kevin Warsh has always been around Trump, because Trump put him in. Is he just going to follow Trump's requests or Trump's need for lower interest rates, or how's he going to respond? Well, here's a clip.
Will you follow the president's wishes or follow the data?
My commitment to you is to follow the law and follow the data.
And that's even if he publicly criticizes you. Will you still do what the data tells you to do?
I will, Congressman.
You ready for that?
All right, so you've got Warsh kind of pushing back there. Hey, listen, I'm just going to follow the data. And maybe the data is now starting to tell him something already with these CPI prints. Because if you look at the hike rate possibility for 2026, it, of course, just caved from 71% down to 50% just in a few short days. And, of course, all of that coming in from CPI and a lot of what's happening in the market. Kalshi odds of a 25 basis points hike in July on the FOMC meeting, which was kind of holding at about 35%, has continuing to drop. This is definitely, I would agree with Zach Pandal here, it's going to zero. And he kind of hits on a few other points here that, let me kind of zoom in on that for you. And he's talking about this Bitcoin wall of worry. And this is something that also, I think, starts to affect the market. And that is what's been going on with MicroStrategy and Saylor and the stabilization of their balance sheet. whether you think it has or not, because it hasn't pegged back yet. We're talking about stretch. And then the other issue is no Fed rate hike, which it looks like for July is going to be the case. We have a Fed meeting next week. And then we have the issue of, do we get Clarity Act passed? So it's really boiling down to that. And I think we are in a position right now that maybe summer might be lining up for a nice little run here. Let's remember one thing that Tom Lee said and has said multiple times, and that is that he is concerned there could be a pullback. Now, has he changed his mind? We haven't pulled a clip that says that yet, but he does give us some indicators around the CPI. Take a look.
Inflation's weakening. If we look at the last 8 CPI reports, the inflation number came in better than expected 7 of 8 times. April was the only shock, effect of the Iran war and on petroleum products and the supply chain. But the May number was a downside reading. And yet inflation is at 2.85% year over year. Now, it's going to become easier comps as we get to June, which comes next week, July and August, because as you can see here, those month-over-month numbers are higher. That's from last year's tariff wars.
All right, so his point is that he understands one thing, and that is there's a declining number here starting to show very significant data to the Fed. And when you look at that and you kind of consider the position for Warsh, maybe Warsh has an idea of how he's going to play this out. One thing that is happening is the market is responding. Bitcoin, of course, reclaimed 64K. ETH, of course, reclaimed 1880. This is all after this morning's CPI post. So another big deal. It's up 2% in the last hour and a half. So lots of good numbers here overall. ETH over 5% up now for the day. And 134 million in shorts were liquidated as well. So this leads me to something else on the agenda for Kevin Warsh. And that is this idea that has been posed before that the Fed could go into the idea of bailing out crypto companies. Well, he had a surprise. Take a look.
There's a rival to these institutions, and that is stablecoins, which are just like a money market fund, except you earn zero interest and everything is hidden. Can you assure us
that we need
that you will not be bailing out stablecoin and cryptocurrency?
We do not want to be in the bailout business, full stop.
But your predecessor did provide a liquidity function for money market funds. If, God forbid, we faced a similar circumstance in the crypto world, would you bail them out?
I want to be very clear. We're going to do everything we can to mitigate those sorts of extraordinary risks. We want to be in a position we're not bailing out anybody, including crypto.
You're not really answering the question.
Wow. I think they may have backfired on little Mr. Brad Sherman there, and that is Kevin Warsh just said he's not bailing out the banks. He said we're not bailing out anybody, including crypto. So big news here coming out of the Fed for sure. And I look at where this could be going for the market, continues to pressure. ETH, of course, showing some significant move here on Binance. This kind of revenue, or I should say buying activity on Binance. This shows one thing, guys. Could this be the actual time where Ethereum starts to break away from Bitcoin and gets into a move that could be aggressive here? Mike Novagratz was talking about the volume, and it's actually picking up. Are we actually nearing a bull market cycle? Are we getting close? Take a look.
There's some hope on market structure, not a ton. I say it's 50-50 right now, but I think you're seeing volumes pick up. Volumes are up 20-30%. From a pretty low level, but they're picking up. You're seeing some activity. I mean, Robinhood launched a chain with, to compete in the, the DeFi space, and boom, big usage first day, 3 times. Now, listen, first day, there's a lot of hype, but it was 3 times the use of Hyperliquid. And so that's a big deal. Robinhood is 15 million customers in the US, a monster here domestically, at least, smaller overseas. And so you got a lot of decent little stories showing up around the edges.
Ethereum is growing against Bitcoin thanks to Robinhood Chain, and that's just one TradFi company. So imagine if this goes into a lot of others, you're going to see some others. Look at this right here. This is an interesting chart. This is ETH Bitcoin chart before Robinhood and then post Robinhood in terms of just launching a chain. Imagine the ability for other enterprise or retail starting to launch on blockchain and have this kind of movement. Robinhood in the finance sector, I get it, probably has the most impact. But one thing it does do is it gets into what many people would say is a meme coin rally. Now, Congress is always worried about so take a look.
You decide whether the rates go up or down. And if you lower them, then people can engage in these speculative bubbles, such as the Trump meme coin, and they can lose a lot of money. At some point, we all have to take a stand, Mr. Chairman. This is going to be your opportunity. You're going to have to take a stand at some point, but you're going to have to be concerned about a speculative bubble, especially as it relates to crypto. This is something that we'll all have to address. I thank you very much.
Yes, and this was a article by Zach Pandal kind of showing the variation between the sectors, performance sectors between crypto. One is the core projects out there that are more financial oriented, meaning they're earning income, making revenue, and then you have the consumer and the culture, which is ecosystem, which is more on the meme coin side. The only difference is that there hasn't been a genesis to move the market on meme coins, where there has been a significant genesis of what we've seen around financial improvement in the blockchain space, primarily because of what's happening in DC and also in TradFi. But if we get another major move, I kind of go against Green there, is that there's going to be some opportunities here for, yes, people are going to go out there and gamble in the meme coin market just like they did before. Some will lose, some will win. Everybody, I think, knows that, but being able to be in a position where you have the opportunity to do it is the key. I want to go to a clip here that breaks a little bit of this down. This is Ryan Rasmussen from Bitwise, and he talked about the idea of vaults kind of as the new ETF. Take a look.
Which is that Bitcoin prices might be down, but it feels like a raging bull market in the vault space. And I think that captures where things are headed. In bear markets, you typically see the foundation being laid for what will grow and see the most kind of euphoria and where capital flow in the following bull market. And I think that's what's happening right now without any of the Wall Street money touching it. You really have to be a crypto native or pretty sophisticated investor who's been investing in crypto for a while to get access to vaults today. And majority of wealth in America sits on these large wealth platforms with financial advisors and wealth managers, and they simply can't access it now. It'll probably be a couple of years before they can access it. Because I think the same thing, again, is true with Bitcoin ETFs. Like, everyone assumes that when Bitcoin ETFs launched in January 2024, it was like this light switch that turned on. It took 2 years for the largest the major wirehouses and largest wealth management platforms to allow their advisors to even start talking to clients about these things. And then they could start allocating. Vanguard just started allowing their clients to access Bitcoin ETFs despite these things being around for 2 years. I think that's the kind of lag you see with Wall Street adoption to crypto innovation.
Yeah, it is in that position. And I think the one difference there that Ryan was talking about is it takes a little bit of time because usually there's some indicators there. But then you have kind of an all-at-once moment. And, markets can move, especially in the crypto market, can become very violent and volatile upside where we see some of these breakouts. And I think that's the real question, because we have a lot of things that are starting to come into alignment right now around Genius, which also could have a little bit of a factor here in how the markets respond. This is a clip on that in terms of the Genius deadline, because it's coming up. Take a look.
The Genius Act, the deadline for the Fed to promulgate rules is this Saturday. Will the Fed meet that deadline?
Well, it's a fair and open question. We're racing to put that out by this deadline.
So as you can see, that's a major deal because we are talking about the final door closing on the banks. This would give them, I think, a very limited amount of ammo. It is an opportunity right now that pretty much gets us in a position where we can move forward on clarity, but there are going to be some headwinds. One of the biggest headwinds in Congress is going to be Maxine, and let's just play the clip.
I have here President Trump's most recent financial disclosure, the bulk of which came from his family's crypto businesses. This is how many pages? This is 900 pages of financial interest. Let me ask you, do you believe we must put an end to it?
Ranking member, you've given us a big job, and I'm focused on that.
Well, let me just go further with the prediction markets.
So what you saw there, of course, was Maxine Waters, and she is going right at the heart of the matter, and that is ethics. If there is going to be a problem, it will be in that area. And I think this is already showcasing right now as we are seeing Clarity Act signed into law plummeting down to 37% chance. This is the lowest it's been in a very, very long time, and continued with pressure on Trump and his financial disclosure and whether or not ethics starts to make its way in. Remember that we're going to get new verbiage coming out of the Senate that is going to combine those two bills. And the likelihood, I think, is we're going to get some verbiage in there that will have issues around the idea of where ethics plays into this. Now, that may have to go back to the House, which is slowing it down, and I get that. Some people are now saying we could even go past the date of August. I hear that, but I just don't know how this gets through with this kind of headwind right now. So when you look at what's going to happen this week, you've got Senator Cynthia Lummis hitting on it right here. We'll introduce the bill text in just the next few days. And this is going to be interesting because she's been on camera. We've had Patrick McHenry on camera talking about that they're going to get this done. My concern is that they may be putting this up just so they can tell the industry, look, we tried to get it up. Does that mean that we actually get this vetoed or voted down on in the Senate? Man, we're going to have a lot to talk about for sure, because this is getting very, very close to the end of the line, guys. So stay tuned right here. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.